Hello and welcome to etbfsi.com. The world of fintech is evolving constantly, and we at FinTech Diary try to map these trends for you. My name is Amol Dethe, and my guest for this chapter is Rishabh Goel, co-founder and CEO Credgenics. Rishabh, glad to have you.
Same here. Thanks, Amol. Looking forward for the interaction.
Sure. So, in this chapter of FinTech Diary, Rishabh, first and foremost, I would like you to tell me or introduce me to your dashboard. What is the company's business model? How many people work with you? How old is your company? What is the basic valuation or how much funds have you raised by now? Just give us some introduction to your dashboard of Credgenics, Rishabh.
Sure. So Amol, I think the whole thesis of starting this company was how we can be a part of that ecosystem, which is helping improve the penetration of credit in India. I think there's a lot of focus when it comes to deepening of credit, right? Giving out loans to the underserved segment. And if you see, India is way behind in terms of the credit to GDP ratio when it comes and in comparison to all the developed economies, whether it's US, UK, or any Western country for that matter. And a lot of startups were focusing on how to deep-root this by giving out loans easier, faster, making it very intuitive, reducing the paperwork, and increasing the speed of disbursement, basically, so that everyone can have credit easily versus the limited access which people generally have because of some of the risk underwritings like banks have and skeptical view of on how, a lot of things. So I think how we thought can be a part of this journey is like how we can help them automate on receiving their funds back. Any lender would want their money to be back with interest, right? I think till the time they have not earned got their last EMI, they have not booked profits essentially. So from that perspective, we saw an opportunity that if we can help lenders scale their collections digitally, that will help them reduce their overall cost to collect per account and also help them scale their loan book and grow very faster and lend faster, which will in general increase the speed of financial inclusion. So at this point in time, I think the startup is 5 years old. So we started in 2019. Right now, working with more than 100 banks and NBFCs and fintechs in India and Indonesia. But obviously, the primary 90%, 95% market for us is India. We have seen a huge growth and witnessed a good growth in terms of whether it's revenue or funding. So till date, I think we have cumulatively raised close to $80 million. And the last round valued us at about $340 million, which happened last year. So this is the current stats. And yes, in terms of our target areas, I think we are trying to penetrate into the Indian segment, which we already have, but still there's a long way to go. And parallelly also exploring other Southeast Asian markets, whether it's Indonesia or Vietnam, because the problem statement more or less remains the same. And India is actually ahead on the roadmap when it comes to financial services.
Okay, so that's good to begin with, Rishabh, and I think meaningful introduction. In fact, glad to know that you're also expanding, in different boundaries and geographies like Southeast Asian countries. I will come back to it. But understanding the whole dynamics of credit now, okay, a lot of fintech specifically operating in this space, and they're partnering with banks. And like you said, India is a kind of credit-hungry country, and everyone
Right.
needs credit. But
Right.
disbursing credit is one part, Rishabh, and more important point is recollection of that disbursement, right? Recovery of that collection where your top banks have failed with you in big accounts, right? So what
Right.
made you think that you will collect the money? I mean, how did you think about it, and what exactly have you developed? What kind of metrics have you developed where you are so confident that you will collect on behalf of maybe banks or NBFCs or whoever the client is?
Right. I think so. Here, obviously, in lending is a collections business, first of all. It's easier to give out money, but taking it back with interest is an actual business model. And till the time, as I mentioned, you have not collected the last EMI, you have essentially not made any money on that transaction. Now, the whole thesis is how you can, so automatically there are two parts on collection, right? One is how you can collect more. Second is how you can at least ensure that the borrower experience is not also not hampered. There are two parts to it because you have to I think increase your lifetime value of that customer, right? You just don't want to lend him money once and then spoil relationships with him. And then I think you don't want him to enter into your lending value chain at any point in time. So how you can like optimize for cost in terms of collection, how you can enhance borrower experience and how you can improve the collections. These are the two, three top metrics which any financial institutions wants to follow. Now, in the current scheme of things, I think as far as collections ecosystem is concerned, it is heavily dependent on manual operations. So there are big BPOs which are running, right? Call centers which are running. Then there are a lot of field forces which visit customers' home and ask for money. Then there's a lot of litigation and legal, etc., which keeps on happening. But if you see, right, whether actually that kind of setup is required for any borrower, I would say majority of borrowers won't even require that kind of a setup. Like I think 70 to 80% of the borrowers would not even require a call to be placed to them, and they can actually be reached out digitally, and they will be more than happy to pay, but provided the nudge is given to them at the right point in time. So how you can leverage this data in terms of figuring out the different segmentations? I think a lot of brains have been put on underwriting in terms of different segmentations, but how you can use the same data in terms of figuring out whom to reach out through what mode and reduce your dependency on manual operations, which enhance obviously increases the customer experience. Now they're not getting unwanted calls. It reduces your cost of operations because now you are not like cost of sending an SMS, WhatsApp, or a notification on in app is much lesser than sending someone at your home or maybe placing a call. Then in terms of automatically your overall collections number would improve because the intensity of digital follow-ups can be much more than the manual follow-ups. So I think there are 2 or 3 major metrics in terms of what is the overall collection number, what is the time to collect. So these are some of the metrics which we help lenders track and see what is the improvement before us and after us. I think so. These are the major metrics.
I copy you, Rishabh, but the whole point is, if you could elaborate more on the nudges part, because had it been as simple as sending a message or maybe a WhatsApp text that please, pay your EMI or, return your money to the banks, perhaps situation would not have been what it is today. And perhaps, the debt of the banks would have been also different. So what exactly do you do? आप जाके कस्टमर को मिलते हो, बहुत अच्छी कहानी सुनाते हो. I mean, what exactly do you do? Just would be happy to know that, Rishabh.
So I think in collections, there is always, I think we say that there are 3 C's. One is connect, that you have to reach out. And the mode of connect can be anything. It
Mhm.
can be a call, it can be a digital nudge, it can be a field, right? So there is
Mhm.
first is the connect, second is communicate, and third is collection, which will eventually happen if the first 2 C's are in place.
Mhm.
Now you can only optimize on the first 2 C's, which is connect and communicate. Now on the connect part, I think all these are modes, right? Whether it is a WhatsApp or an SMS or an IVR or a
Mhm.
call or a field or anything, all these are modes. Now what you have to do is enhance and increase the response on the digital nudges and make them collect, I think increase your collections via digital nudges versus relying on calls or field. This is the sole
Mhm.
objective. I
Mhm.
think how to do that. Firstly, it has to be very, in terms of even the time to reach out, the mode to reach out should be very customer specific. For example, we have seen in tier 2, tier 3 cities, right? There's a huge penetration and people generally respond a lot to an IVR call because there's no true caller and the smartphones are not there. So they are more likely to respond to a call which is coming from even an unknown number. And it can be an IVR number or maybe a general bot call, voice bot call. Whereas in metro cities, people don't pick those calls. Like they can see and they will avoid those calls. There a WhatsApp nudge works better, but at what point in time that nudge has to be done so that at least the response increases, the timing also matters. So there are 5 or 6 levers which we have defined. One is on the time, the mode, the content. Now this content is a part of the communicate, right? What exactly is that script or the communication which essentially triggers some response from customer versus a plain vanilla message asking him for the money, right? It can be either a civil education, that what exactly might happen in case you require any future loans, or if you are improving your credit score by paying on time, what is the benefit of it? Right, a lot of these communication tactics also helps you to get a response and attract a response from the borrower. So how you can firstly enhance the connect, which is using the right mode, right channel, right timing, and second is how you can actually use the correct language and content which will at least attract that borrower and get some response from him. If you're able to manage these 2 C's, right, that connect and communicate, automatically third will happen. But on these optimization variables, you have to figure out whom you can reach out and what mode. And I think we are, the whole thesis at our end is to use data science, use basic borrower behavior and attributes, and develop these models so that even you can bifurcate basis the intensity, basis the response on different digital channels, and try to optimize for these reach outs. A lot of these is already happening. If you think on sales, a lot of sales automation platforms are trying to make the sales effort very personalized. right? But no one actually is trying to make any of these collection efforts personalized. It is a standard SMS response saying that please pay your EMI, right? This is a standard SMS which goes to everyone. But now imagine that the same personalization, if comes even from a collection standpoint, that is the entire thing.
But everything is digital.
No. So I think there are filters, what we say. So we as a company, I think there are two business models. One is purely on the software, where we say that we will deploy the system, we will deploy the software, and your team can run the entire show from the strategy to the calling to the field. Everything, there is a user-based module. It's a user-based pricing that you can onboard your calling teams, you can onboard your external call centers, field agents, etc. And we will just provide a SaaS platform which essentially will allow you to map your entire hierarchies, etc., and get some data science insights to run that show. So that maybe covers 60, 70% of our revenues, right? Where we are just enabling lenders to collect on their own and we are just providing the platform. Now, remaining 30% comes where we know that the teams are not there and we say that we'll take the onus on collections, and then we work to do that end-to-end resolution from even earliest as pre-delinquency when it has not defaulted up till the write-off. There it is a combination of digital plus calling, etc., wherever, whatever efforts are required, but it is obviously an optimized effort because there our teams also uses our own platform, so it becomes inevitably our client in some shape or the other for the software part. So these are the two business models which we operate on.
So sure, noted that. I thought collection is obviously a very integral, but a very a difficult part for every lending institute. And you must have, put some equipments, maybe which James Bond or the Tom Cruise use in Mission Impossible kind of things, additional and advanced technologies for a recovery. But thanks for sharing that. But Rishabh, now I want to also ask you, how's your accurate, how accurate is your are your nudges, and what is the recovery ratio till now? If you could give us some examples and maybe share some numbers there.
Sure. I think so. There are a lot of key performance indicators, KPIs, we call it, right, which you track. And every lender has a different, as in that overall ecosystem would have the same set of indicators, but I think every lender wants to optimize for some of these top performing indicators from their perspective. Right. So I think what we track, for example, the first metrics we track is bounce rate. Like once you have given out loan, now suppose you have a base of, let's say, 10 lakh customers. On an average, you see there is a bounce rate of 18 or 20%, which essentially means 2 lakh customers bounce every month.
Right.
Now, what basic nudges, how you are able to optimize and reduce this, that this 20 goes down to, let's say, 16 or 17, and you are able to reduce 3% of the borrowers from even bouncing. Right. Which essentially means that firstly your bounce rate has gone down, and that 3% of the borrowers on a base of 10 lakh, which will translate to 30,000 customers, you will not be collecting in the first bucket, which is the first month of the default, where an average cost to collect is roughly 200 rupees. So automatically, if you have like reduced that bounce rate, you have saved 60 lakhs monthly, because that customer, or you are spending an average 200 to collect from the customer, and that would have bounced and come to the first bucket. Now, how do we do that? There are obviously different mechanisms and different ways in terms of figuring and slicing and dicing the customers and helping them figure out whether a prepayment would do, helping them figure out that if they like this is the past payment pattern, if you are able to see, right, that there is a erratic pattern in terms of their bounces, and maybe there's a cash flow mismatch issue that they generally pay on a certain date, but the EMI is presented on a certain date. If there is any cash flow mismatch, then automatically how you can change maybe his EMI date, or how you can help him adjust his cash flow so that he's incentivized to clear the bounce. So a lot of these heuristics at a borrower level are decided by the platform to figure out whom to reach out with more messaging, and maybe we can help them with the cash, with the EMI date change, etc., basis their payment pattern in the past. Right. So that becomes the first KPI, right? If you are able to overall reduce the bounce rate, which is a very important KPI tracked across the lenders. Then second is if it has bounced, inevitably bounced, right? Then how you can cure that or control that, like maybe how you can improve the resolution in different buckets. Maintaining the cost to collect, maintaining that I am not exceeding my budget on a cost to resolve per account, right? Or maybe even reduce that. For example, I told you 200 rupees is an average cost to resolve an account in first month of default. How that 200 can come down to 150. And the only way to do that is like you have to reduce the calling efforts on the entire pool. Maybe you have to bifurcate that. Suppose 30,000 accounts have defaulted. Now I'll only park 10,000 with the calling teams and 20,000 I'll try to resolve digitally. Because we know that there are some efforts on the digital channel which actually will yield results. So I think how you can the perfect combination and blend of data and also the digital nudges, you can reduce your overall cost to collect. So there have been multiple studies, I think, where we have seen that there is an 18% reduction in cost to collect in personal loan space. In commercial vehicle, the cost to collect has gone down by, let's say, 8-9%. So we have done a lot of these case studies with our customers as to what is the impact which they have seen post the onboarding in either the commercial vehicle space or the personal space or any space which we are operating in with them.
What is the current situation now? Because uh, uh, we have seen a lot of disbursements specifically into the personal finance space from the banks, NBFCs, also from the fintech side, because they're working as a leading agencies or an aggregator for them. Do you see delinquencies rising up now? Because your business is growing, which means that the delinquencies have risen in the system.
No, no, no. So that's, I think, so like as I mentioned, that even if the lending increases, our business increases, irrespective of whether the delinquencies go up or not. Because even we enter the journey before delinquency happens, which is pre-delinquency, we call it PDM, pre-delinquency management. So if the overall lending is increasing, I think we have a huge share. And even if you consider, right, like we feel that it is a recession agnostic business. Reason being that if the economy is doing well, right, the lending is increasing, the defaults are less. But as a percentage, the default percentage would still be the same. Like if it is, let's say, 10%, right? Now, 10% of 100 versus 10% of 200, in absolute quantum, it is increasing. So if the lending is increasing, our absolute quantum of business obviously increases. If there is a recession, if there is a defaults are increasing any which ways, then also the business increases. So for us, it is like it becomes agnostic of the economic environment, and I think that is a good part of this type of business. But in general, if you're asking the trend now, how exactly is the lending increasing or what is the current situation? I think so. Overall, post-COVID phase, the numbers in terms of the lending, in terms of the queries, in terms of the overall disbursement has gone past like almost 2x of what used to happen before COVID. Pre-COVID numbers, I think, have been surpassed way back. So the lending is happening at its full pace. And at this point in time, even we have seen there's a lot of demand of credit from the MSME space, which essentially means that the overall business mindset and a lot of SMEs are coming into the picture, which essentially is very, very important for the overall growth of the country. And I think at this point in time, a lot of startups and financial institutions are specifically focusing on that segment because the need of credit from that segment has increased drastically. And also that is one major area where penetration has to happen. I think we have more than 6.5 crores SMEs, out of which only maybe 10% have access to credit in terms of the financial finances. So there's a huge scope there. And eventually that helps if you're lending to an MSME sector, it helps in revolving of capital because any which ways I think they're using it for business. So overall it will help in the GDP growth. So we have seen that SME and MSME sector is growing big time. A lot of focus has come there, whether it is pushed from the government and whether it is the actual lead in the market. Both have evolved. And in the current scheme of things, I think that is one major sector which is like in the disruption phase. And overall, even in the lending space, even on the personal credit side and the finance side, on the credit card space, you mentioned, right? Credit card, just a simple data point. Uh, in US, we have roughly like 300 million population, right? But a credit card base is 1.2 billion, which essentially means on an average, every individual carries 4 credit cards. So it's such a country which is deeply dependent on credit helps them in terms of the revolving of credit and overall GDP. Now in India, right, and on a population base of 1.2 billion, we have 66 million credit cards, which essentially means that there is a huge scope even in terms of that market getting increased. So I think there are a lot of players out in the market who are dispersing credit cards, increasing the penetration on that. So I think overall the lending pace at this point in time is higher. When you talk about defaults, I would not say that there's any like abnormal pattern we are observing, which we observed, and stress testing scenario which we observed in COVID. I think at this point in time, it is a normal cyclical curve which we are seeing in the market. So I don't think there is any abnormal trends or patterns which were there out in the COVID phase.
Okay. A lot of fintechs are operating in now, those who are finding a business model quite profitable or sustainable or more purposeful are also expanding abroad. You are one of them. How do you see the Indonesian market and what kind of opportunities do you see for Indian fintechs in Indonesia, Singapore, and specifically in the Southeast Asian market, Rishabh?
Right. So I think Amol, on that part, right? You have seen a lot of startups, like irrespective of financial services, but a lot of startups from India going to Indonesia and other markets. The reason is there are a lot of similarities in terms of how we operate, the overall culture and the overall market dynamics. So you can say that Indonesia is, like, in terms of GDP per capita, it's higher than India. I think it's almost 80% higher than India in terms of GDP per capita, which essentially means that the disposable income is higher for them. And also, but I think when you talk about development or maybe financial services or technology, they will be 5, 7 years behind India in a lot of aspects. So that whole thesis that they have money, they are good from I think monetary perspective, but from a technology perspective, India is ahead of them, and the market dynamics, etc., more or less replicate as to what India had. So eventually, I think it becomes a natural extension. Anyone who is focused on working in the Southeast Asian geographies, I think firstly chooses Indonesia because of these reasons, and also in terms of their overall market size, TAM, when we call it, right? They have roughly, say, 330 million population, which is obviously lesser than India, but highest in the entire Southeast Asian market. So now, if you compare that, if you have to figure out a target market, automatically Indonesia becomes a likely extension, that they have a decent population, which means the market size is good. They are 5, 7 years behind India in terms of technology adoption. So essentially means that you are ahead of the curve when it comes to technology, and the dynamics in terms of the culture, etc., replicate India. So I think that becomes a natural extension for most of the startups, and specifically in the financial services. We have seen even a lot of lending companies have actually gone there and are setting up their shops in Indonesia because they feel that the market is about to disrupt and they can digitize even the underwriting and the lending processes. So a lot of lenders out of India have now started their shops in those markets.
Sure, I think it was quite meaningful, Rishabh. And let me shoot. I think you partly touched that, but one last question now. So, what next now, specifically for Indian fintechs? Why I'm asking you this question is currently where we are today, where there are certain issues with the fundraise. The investors are not as active as they were, but regulators are quite active. Compliance has become a big burden for the fintech companies because they know the regulators will not spare them, and overall situation is at one side it's robust, but on the other side it's quite tricky. So in this situation, where do you see yourself, where do you see the fintechs specifically for India going ahead?
I think so. These are cyclical patterns. It's cyclical, more or less, like the funding patterns. If you observe, you can see there are cycles where the funding is at its peak, which happened in 2021, 2022. Huge liquidity in the market. US rates were down. People were pumping in money in the Indian ecosystem because of the huge growth potential. But in the last 1, 1.5 years, I think a lot of focus has changed from growth to sustainability. Uh, Growing at any cost versus growing at a slow and steady pace with a sustainable approach, that you are not dependent on external cash flows or external funding for that matter of your survival. I think the whole change which is happening in the ecosystem is happening for good reason, being that at least every startup, right? It is irrespective of a startup or a business. Everyone should have a focus on bottom line, right? It's immaterial to run a business which is not making any money after 5 years, 7 years, 8 years, right? Because that is like, this is a very, very long gestation period if you have to figure out. And I think that also makes you vulnerable to these economic environments where you're always dependent on external cash or funding to sustain yourself. So I think that focus, the change in focus and mindset of a lot of founders, where you have to actually grow business with profitability versus growing at any cost, that is a good mindset for the overall ecosystem in general. And I think it's also cyclical in a way that there's no funding winter, etc., etc. I think the Fed rates, etc., would adjust, and this should soon be over. At least we are expecting that it should be over by 2025, in 1 year's time frame, that everything should be back to normalcy. And Indian markets, if you see the public markets, please, they are supporting, they are not impacted. It's only the private placement and the private markets which are impacting, and there is no funding happening. But if you see the public markets, they are trading at decent levels in India, and a lot of shift and focus change has also happened. If you see a lot of companies, you might have heard about a lot of fintechs moving from US to India to list. And the reason is that obviously the Indian markets are sustaining those type of valuations, and the investors are bullish on the growth story of India, and hence these shifts are happening, where a lot of Indian founders wanted to shift to US, and then a lot of founders after building business are shifting to India. Uh, so for that matter, it's obviously a good face, whether it's financial services or any other startup. When you talk about pure financial services, regulators have been really, really active in the last 6 months or 1 year or 1.5 years. And I think obviously I would not say they are against innovation or anything, but I think if you see the overall systematic risk in the economy has increased because of a lot of these money being dispersed, etc., etc. And I think how you have to balance that out so that you're not creating a crisis like 2008 at any point in time. Uh, and you should be aware and at least be ready for any of such events, right? Because if there's a like if everything is hunky dory, then you don't feel the need of even dwelling into such scenarios, that you will figure out what might be a risky scenario, stress testing scenario, that everything goes down. But as a regulator, they have that job, right, to figure out what wrong can happen and at least be prepared, or maybe at least warn the startups beforehand that this can lead to this type of risk. So they have been active, I think. And also some people feel they're hampering innovation, etc., but I would not say so. The reason is, like, innovation also cannot happen at any cost. There has to be some risk associated with that, and it has to be balanced out so that in the overall scheme of things, it's a risk balanced approach, which is taking the growth curve versus like innovation at any cost, for that matter, right? So I
Right.
would not they are like doing anything bad at this point in time, but yes, they have been active. So everyone knows that like the most ignored area, right, while you were growing your businesses, was compliance, that no one eventually focused on compliance, and was just working on the business model, etc., without figuring out the legalities and the compliance part of it. Maybe there's no intent issue on the founder's part also, but I would say ignorance. That was majorly a case of ignorance versus an intentional violation of the guidelines. Uh, I think so. At least now people will be careful while doing any of these things. And as far as we are concerned, I think we become technology TSPs of the lender, so we don't come under direct regulation. But since we are working with the regulated entities and everyone, we also have to be very, very careful in terms of our contracts, our boundaries, and what exactly we can do, we cannot do. But I think so, but not directly regulated. But yes, we have been in compliance with all the things which are bound to us by our customers.
Noted your points, Rishabh. I think I have more questions, but the time is limited. So I will stop here. Maybe we'll discuss more when we meet or maybe in the other episode. But thanks for your time and sharing these insights on the FinTech Diary. Thank you so much, Rishabh.
Thanks, Amol, for giving the time.
Thank you so much for watching etbfsi.com. Thank you.